Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. Stock markets end with marginal losses after a volatile session. Sensex ends in the red, Nifty above 16,500. Realty, capital goods, top losers. Metal stocks rally. Brent Crude hovers around $120 per barrel once again after Saudi Arabia hikes oil rates from July. The move signals tighter supply even after the world's top oil-producing nations agreed to hike output over the next 2 months. LIC hits new low since listing. Share price slides below 800 rupees. Market cap less than 5 lakh crore rupees. Tata Motors bags India's biggest EV fleet order from BluSmart. Will deliver 10,000 express TEVs to Deepika Padukone-backed all-electric cab service company. The 3-day meeting of the Monetary Policy Committee kicks off and rate hike seems imminent. Market experts believe central bank may go for at least 35 basis point hike. All eyes on FY23 inflation forecast. Markets off to a slow start this week. Benchmarks finishing a volatile session marginally lower, falling for a second straight day. Investors on the Lal Street await the outcome of the RBI MPC meet, which commenced today. Though Sensex was able to recoup from the day's low, it ended 94 points lower, shutting shop at 55,675. Nifty 2 had a flat close and slipped to 16,570. The insurance behemoth LIC continued to disappoint. The stock, which has been on a downhill since its listing, hit an all-time low with shares sliding below 800 rupees. With an almost 3% fall in shares today, the market cap of the company also fell below 5 lakh crores. Among the 29 laggards in the Nifty basket were Shree Cement, BPCL, Asian Paints, Ultratech Cement and Hero Motorcorp. Gains in metal stocks and a fag-end rebound in select financial shares helped benchmarks to recoup losses. Bajaj Auto, JSW Steel, Tata Consumer, ONGC and Apollo Hospitals, some of the gainers among the blue chips today. Joining us now, our global business editor, Udayan Mukherjee. Udayan, what's your take on the current market action? We seem to still be in the throes of volatility, of course. And LIC specifically, I wanted to get your take on, given the fact that it's actually already trading at its all-time lows. So lack of action, completely emphasized even post-listing.
Yeah, LIC has been a bit of a letdown, Abha, and I can't say that I'm very surprised by it because it looked like it was setting up for a post-listing disappointment. If you look at the internals of LIC and the way their embedded value is calculated, it appears to me that they will actually move with the market. If the market goes down and you see a lot of volatility, LIC will be regarded as a proxy for the stock market because of how much it derives in terms of its value from mark-to-market gains from the equity market, and there is just no escaping that. So frankly, I'm not surprised that LIC's had a weak listing for various reasons other than this, and it might continue to grind in a bit of a range. I think some part of the price adjustment has already happened, trading at below 800. A little bit more might happen, but I don't see it collapsing like Paytm, but it may just begin to find some kind of a trading range, maybe in the 700 to 800 kind of price band, and that's my expectation with LIC. On the market itself, I think it's in a pause mode. We've had a grinding fall over the last couple of months. The Nifty went down and successfully defended its near-term bottom of 15,700, 15,800. We've come back 5-6%, all the way back to 16,500, and now I think the market is at a bit of a crossroads after the pullback rally, and is trying to assess whether it's prudent to take it further from here, or the market just needs to consolidate as the next set of data is manifest itself. The next set of data could be global in nature, on how global markets and the inflation data pans out, or it could be local as we get the earnings season, the April to June earnings coming in July, which might indicate that there might have to be more downgrades in our earnings expectations out here. Both of these are very important factors for the market, and those might be the triggers which determine whether the Nifty can edge its way back to 17,000, or it needs to go back and retest those recent lows or even climb lower. As I said last time, not confident that the market's made its final low for the year. And I think we will probably continue to see these falls and these pullbacks and fair degree of volatility as we go ahead. And we are in the middle of a pullback right now and a consolidation phase post that pullback. So the market might try to work with a kind of a range for the moment and then wait for the next set of data to provide the impulse.
And as the LIC flop show continues, what should investors do? My colleague Sakshi Batra had a word with Avinash Gorakhshakar from Profit Mart Securities. Listen in to a quick take on what perhaps would be the right strategy on LIC at this time.
I wanted to understand from you, but where would you and the investors really draw valuation comfort at LIC? The new embedded value, where would that be, where it will definitely give that kind of a confidence to investors that long term it is going to be a growth story?
Yeah, I think my guess is, whoever has invested in LIC, unfortunately, if they've invested for IPO gains, I think that is completely ruled out now. I think whoever is holding on to LIC, my sense is unless you've got a 2-year view, Sakshi, this stock is not going to make a lot of money for investors because clearly, if you look at LIC, if you look at all the other private sector insurance companies, there's a significant difference in their profitability levels. As mentioned earlier, LIC is more largely on the annuity side of the business where the margins are lesser. And obviously the value add, the margin, which is the incremental margin, which is earned on new policies, that is also comparatively lower compared to an SBI Life or maybe a Max or something like an SDFC Life. So I think you have to give some time. Our sense is that hopefully now the company has gone public. So there will be a revised kind of aggressive approach from the LIC management. And obviously the company would also like to see that, its market cap actually catches up with the private sector peers. So this is a process which may take at least 3 to 6 months.
Nilesh, it's very good to see you after a long time. My first question to you, of course, is about whether retail investors in India will hold their nerve through this volatility, because they have held the market up quite well in the face of relentless FII selling. But as this volatility continues, do you see the fear, or are you seeing any signs that the enthusiasm from the local investors of the last couple of years is beginning to ebb, or any questions are being asked? Because you're in a very good vantage point to gauge retail sentiment. What are your thoughts on this?
So then that's a great question. This is first time in my life that I'm seeing investors more confident than fund managers. I go and present to investors saying that this is an uncertain time. There's so much of uncertainty around, returns will be volatile or negative. And they come back saying that, Nilesh bhai, we are here for long term. So I believe that this time there are lots of investors who are very confident and who will continue to support the market through their disciplined investing.
What is your advice to them at such a time when they are sounding so confident? In terms of asset allocation, what are you telling them? Because we've seen equity market volatility and bond yields have gone up quite a bit. Fixed deposit rates from banks will start to head up soon. At such a time between equity and fixed income, what is the ideal asset allocation that you're recommending?
So one thing then we have been telling our investors is that this is a market full of uncertainty. What happens in Russia, Ukraine, what happens on oil, what happens in US Fed rate, and how India's own inflation trajectory behaves. All these are going to make a material impact on market. This is the market where in fixed income you try to remain either in dynamic side of the bond fund or at the shorter end of the curve. On the equity, you try to be marginally overweight large cap and marginally underweight small and mid cap. And within that, keep equal weight allocation to equity. If there is correction and market continues to trade below its average valuation, then you can increase your allocation to equity in a very, very calibrated manner. Don't jump into market at one go. There will be lots of volatility ahead. So please become overweight at lower level in a calibrated manner.
That's a great point, and this brings me to my next question, Nilesh, because over the last couple of years, since the COVID scare, this market in India has traded well above average mean valuations of the last 15-20 years. I mean, we are used to trading on an average at about 15 kind of P multiple, but we've been trading at, given whichever time you focus on, 18 to 20 kind of P multiple. Given this volatility risk ahead, do you see this market having the risk of going back to the average valuations of past years, which is about a 15p multiple?
Then you have made a very, very important point that for a while we were trading way above our historical average valuation. And partly this was driven by very strong earnings growth, which we witnessed especially in 2021 and 22. Now, going forward, interest rates are rising, inflation is rising, and earnings growth on this larger base is likely to slow down. With all three things together, should there be a marginal derating of Indian valuation going back to its historical valuation? It is quite likely. However, a lot will depend upon what happens in, the inflation trajectory and interest rate movement globally. If we look at the base, the US Fed rate should go higher than what is priced by the market. If we look at US employment data or housing data. On the other hand, keeping in mind midterm elections and also the first quarter GDP number which came negative 1.4%, there is a small possibility that US Fed rate may not rise as much as discounted by the market. So to a great extent, how interest rates move and how earnings growth move will determine whether we will trade at recent valuation or revert back to our historical average valuation.
Nilesh, what is the likelihood, given all the ingredients or factors that we just touched upon, of a global recession coming sooner or later? Would you say that you're monitoring some of these factors very closely over the next few months? Do you feel the chances of it have receded, given perhaps, like you said, the Feds need to be a little bit more cautious on its aggressive stance? Or do you think we're going to see it regardless of timing, simply because the era of easy money cannot continue?
But the base case across most countries, including globe, seems to be of a slowing growth but not getting into recession. However, a lot depends upon how Russia-Ukraine situation develops. If there is an escalation which is not priced by the market today and it results into supply chain disruption and commodity price inflation, undoubtedly global growth can decelerate further from current levels. But at this point of time, looking at the current situation of commodities which have started correcting, and looking at the current situation in Russia and Ukraine, where war seems to be focused more, in certain areas rather than whole of the country, it looks like global growth will slow down, but certainly not to the extent of a recession.
And you can catch the full interview with Nilesh Shah on businesstoday.in as well as our YouTube channel.
Щоб весь світ побачив, що робить Російська Федерація на мирних землях європейських держав і що ми можемо зробити з ними. Якщо приходять до нас з мечем, то від меча і помруть. За мною ви бачите зруйновану, знищену техніку Російської Федерації, яка була знищена безпосередньо у Гостомелі.
негативні відчуття, не радість точно. Якби була вже перемога, тоді можливо була б радість. Чекаємо перемогу, щоб прийти вже, наверное, всією родиною, святкувати тут, щоб побільше техніки їхньої тут було. І буде тоді, потім будемо радіти. А поки що нема чому радіти, поки що ще тяжко, тому що зараз всі... Тяжко, тому що зараз всі начебто фотографуються, я фотографуюсь, посміхаємось, а десь зараз на сході, і там зараз бойові дії йдуть, там зараз тяжко. У мене навіть рідний брат теж воює, то це тяжко.
Bollywood's biggest night returns. After a 2-year pause, it's back with a bang.
Welcome to Alpha!
I'm Dipali Patel and you will be joining me at the heart of the Alpha extravaganza in Abu Dhabi. The stars are all aligned on India today.
Welcome back. Even as the Reserve Bank of India's panel on interest rates entered into a 3-day huddle this morning to decide on the next repo rate hike, the government has shocked more than 60 million private sector employees by cutting the EPF rate to a 44-year low. What this has done is to further discourage hundreds of millions of Indians who swear by the safety of small saving products.
Based on this assessment of the macroeconomic situation and the outlook, the Monetary Policy Committee voted unanimously to increase the policy repo rate by 40 basis points.
A little more than a month after this 40 basis point surprise increase in repo rates, another interest rate hike of up to 50 basis points is expected on Wednesday. In a poll by Business Today, 40% of the respondents forecast a 25 basis point hike, 22% expect a 40 basis point hike, while the rest predict a half a percentage point hike. The big reason is RBI wants to suck out the excess money in the market, which is pushing up prices across the board. The past few months have seen food prices spike up by double digits, sending household budgets for a toss. While India's consumer price inflation hit an 8-year high of 7.79% in April, the wholesale price index was at a record high of nearly 15.1%, making many wonder why the government decided to reduce the EPF interest rate to 8.1% for 2021 to 22. The rate is the lowest in 44 years. In recent years, the EPF rate had peaked in 2018 and 19, reaching a high of 8.65%. It took 3 years for the rate to fall to current 8.1%. In fact, the reduction in the EPF is being seen as yet another step which makes small savings a loss-making deal for investors. Most of the other small savings schemes, including PPF, National Savings Certificate, and the Sukanya Smriddhi Yojana, have returns far lower than the annual inflation. The worst return is on the humble FD, which in fact is also taxable. For the hundreds of millions of Indians who are averse to risk and do not see stocks as an investment, the mantra of save, invest and prosper does not seem to be holding truth anymore. Bureau Report, Business Today Television.
While oil prices were already on the boil, Brent crude prices surged further to about $120 a barrel after Saudi Arabia raised crude prices for July. The move signals how tight the supply is even after oil-producing nations agreed to accelerate their output over the next 2 months. Saudi Arabia raised the price for crude to Asia to a $6.5 premium. That's the highest since May. On the other hand, amid a continuous surge in crude oil prices, oil manufacturing companies rallied in trade today. Reports also suggest that India is looking to double down on its Russian oil imports, with state-owned refiners eager to take more heavily discounted supplies as international players turn down dealings with Moscow. It's a triple whammy for Indian investors who had put their money in Terra Luna crypto. The once stable currency has lost its entire value, resulting in a complete loss for investors who number in lakhs. Tax laws also prevent adjustment of these losses with any other instrument, translating into investors having to absorb the entire meltdown. There was some good news with promoters of the Luna issuing fresh tokens called Luna 2.0 for investors. But this may also be a losing proposition in India, with investors either having to pay a gift tax on the airdrop tokens or a flat 30% income tax. For more on this, my colleague Akanksha Ramchaturvedi spoke to Purushottam Anand, founder of Crypto Legal. Listen in.
The recent Terra Luna crash, it has impacted the Indian investors as well, not just global investors. Millions of dollars of wealth was wiped out, but the Indian investors were also impacted by this. Could you please shed some light on how the Indian investors were impacted by the Terra Luna crash?
I think Indian investors were impacted just like any other investor, because see the way that these cryptocurrency projects work, like they are inherently global in nature. So whenever there is a new crypto project, then you'd see investors across the world coming there and then investing in the project. And it was a promising project, by the very fact that it was actually in the top 5 in terms of the total capital market, that it had. So once the project went bad, of course, everyone lost money, involving so many Indians who had invested and were promising something from the project.
And so could you talk about the tax implications of the Terra Luna crash on Indian investors?
Yes. So as we know, in the recent tax provision which has been introduced does not really provide for any set-off. Now that becomes very crucial in cases like these, where one promising cryptocurrency where you invest almost goes to zero, because there is a total, say 95-100% loss. And then you are not even able to set off this transaction with the other cryptocurrency trades that you are doing. So for example, even if the same person has invested in, say, Bitcoin, and there if he earns 100% profit, he's not really able to set off the loss that he has incurred for Terra Luna. So that becomes a little problematic. There is another aspect which is very interesting here. And right now we don't know how exactly the tax department will treat this transaction. And that is the airdrop situation and the way that the airdrop is actually designed by the Terra team. So, I'll just tell you a bit about how the airdrop is happening, and then we'll see what would be the tax implications. So, Terra Luna 2, which is basically the version 2 of the initial coin, which is now being called Luna Classic, is being airdropped to everyone who actually held the initial, original version 1 of Luna. Now, the problem is the moment that we call that airdrop, it comes, for the tax department, it may come across as if there is something which is being received without any consideration, right? Because this is something which is being airdropped without any active cost of acquisition. In this case also, now assume the situation that the department says this is a fresh airdrop without any cost, then everyone will have to pay 30% tax on the equivalent amount of whatever Terra Luna they are receiving. But in fact, the new airdrops which are coming to people who initially held Luna version 1 is kind of a replacement of version 1. Because the initial version did not work out. And then, the project had to do a hard fork and then launch a new version of the token. So in my understanding, to be fair and to get reasonable tax, the appropriate situation or approach should be that you take the initial cost of the version 1 acquisition, whatever is the money that investor, incurred in acquiring that money, and consider this version 2 as a replacement of the initial version 1 token which was there. But we don't know yet basically what is going to be the approach.
All right, let's take a look at what else is making news in the corporate world. Automobile giant Tata Motors has bagged India's biggest electric vehicle fleet order. Tata Motors will deliver 10,000 EVs to BluSmart, an all-electric cab service company. And as the world gets ready for the future of tech, MG Motor forays into the metaverse universe. To offer an immersive experience for customers and stakeholders, MG Motor has launched MG Verse Arenas. Users can access the platform later this year. In a move that will benefit IRCTC, Indian Railways has doubled the number of online tickets that can be booked per user ID using the IRCTC website and app. With this, a maximum of 12 tickets can now be booked in a month by a user ID, which is not Aadhaar linked. Former captain of Team India Mahendra Singh Dhoni has invested an undisclosed sum in Chennai-based Garuda Aerospace, an Indian drone startup. Dhoni has joined the startup as a brand ambassador. Garuda has 300 drones and 500 pilots operating in 26 cities across the country. And that's where we leave it on the show tonight. Thanks for watching.
On a daily basis, thousands of oil spills occur worldwide in the oceans, causing oil pollution. This oil pollution in the oceans can have a disastrous effect on marine life. Most people don't realize how serious the problem is until there's a major incident at sea, such as a tanker spill or an oil rig explosion. Oil slicks have the potential to kill seabirds and marine animals such as seals as they drift towards the coast. Although only 10% of global marine oil population is caused by spills of this nature, the majority is generated by everyday maritime traffic such as illegal dumping and tank cleaning, as well as onshore industrial activities. The environmental impact varies depending on location. Deep sea spills are typically smarter and easier to clean up. The oil sinks as it becomes denser, is broken down and destroyed by bacteria. Oil slicks on a rocky coast or exposed beach can have a significant impact on marine ecosystems, and they can take up to a year for wave action to clear away. This oil pollution is also extremely harmful to coral reefs. Coral regeneration can take up to 10 years and is often irreversible. And pollution in mangroves or on sandbanks can cause long-term damage that lasts more than 20 years.
Make your media plan smarter with India Today Live TV on your connected devices. Make your media plan smarter with India Today Live TV on your connected devices.
You are watching India Today.
Oh, sorry.
Presented by Berger Easy Clean. No dag, no dhabba, only beautiful walls.
Hello and welcome. Thank you for tuning in. I'm Pooja Shali. Let's begin first with the headlines. Arab world unites in condemning India over BJP spokesperson Nupur Sharma's Prophet Muhammad remark. But India has decided to reject the OIC statement, calls its fury unwarranted and narrow-minded. Mumbai police may summon Nupur Sharma, action likely after an FIR was registered against the suspended BJP Neta on a complaint by the Raza Academy. Mumbai police claim to uncover the plot to kill superstar Salman Khan after the actor receives a threat letter saying, and I quote the letter content here, "Aapka muh se wala kar denge." Bishnoi gang is under the scanner. New CCTV video, Moosewala murder. Man took a selfie with the singer minutes before tipping off gangsters who shot him. India Today unmasks the murder suspects. Khaki Nikkar Nataka over textbooks in Karnataka after Siddaramaiah threatens to burn RSS shorts. Union Minister Prahlad Joshi hits back, says Congress knickers are already loose and torn. Billionaire Elon Musk threatens to walk away from $44 billion Twitter deal if not provided with data on fake accounts. Says his information rights are being violated.